For many of us, 2020 was the hardest year of our lives. Australia is still reeling from the economic and social impact of the COVID-19 pandemic. However, the pandemic has accelerated the push towards a digital economy and empowering Australians through technology. More of us are working from home more than ever before, choosing when we come into the workplace. We're using video calls and other communications tools to save time and get more done. One sector critical to the nation's ambition to be a digital economy is the FinTech sector, and its growth through the pandemic has been critical to the economic recovery. It's employing thousands of Australians already and growing rapidly. It's also transforming the way we manage, save, and spend money. Australia's largest emerging companies are FinTechs, and they are drawing overseas investment into the country. Many, like Afterpay, Zip, and Upbank, are household names. But crucially, they are helping everyday Australians get smarter with their money. They are teaching them how to save, plan, and capitalize on every dollar they earn. FinTech is slowly but surely changing the way we think about money in Australia. Not only is it directly contributing to our economy, but it's making it stronger. Here at Intersect, we're discussing this future and asking the big questions. We'll be hearing insights from new voices in the sector and giving a platform to some of the behind-the-scenes talent that have put Australia's FinTech industry on the map. So sit back and enjoy Australia's most thought-provoking conference, Intersect.
There you go. Hi, everyone. Just a quick welcome from me. Welcome to Intersect's digital program running and hosted by FinTech Australia. My name is Rehan Makdi Almeida, and I head partnerships and marketing at FinTech Australia. The digital program is an opportunity to extend our reach and showcase the latest FinTech trends, policy developments, or companies at the forefront of new technologies or products for those that cannot attend the physical event or have purchased a virtual ticket. And we would like to take this opportunity to thank our major sponsors, the Victorian Government, Austrade, Xero, BPay, and Data Action. I would also like to thank our digital sponsors, Manuva, BDO, the Argyle Network, and Q2. I would like to introduce you to Alan Tsen, Australian Manager at Chippercash and Deputy Chair at FinTech Australia, who will be moderating the session today with Alicia, COO at Chippercash. Thank you again for participating in our digital event series. Alan, over to you.
Thanks, Rehan. Thanks for that intro. It's always good to see us talk about, from a FinTech Australia perspective, what's happening in Australia from quite a broad perspective. So thanks for the intro and that great video. Welcome, everyone. Thanks for joining us tonight. As you probably know, we're going to be talking about expanding into new markets. As Rehan said, my name's Alan. I'm the country lead for chippercash here in Australia. Before we get going and I introduce you to Alicia, just want to motivate the conversation a little bit and really sort of think through, some of the things that, entail global expansion and sort of how we think about it. So I think broadly, I was looking at some of the companies that have expanded globally, and it's actually quite rarefied air when you look at companies in more than one market in consumer fintech. It's even rarer air when you look at companies that are in more than two markets. Now, I think for anyone that's, been in or around fintech, the reason feels really intuitive. Regulations, financial services are a little different than spinning up a social network, access to infrastructure, go to market's quite challenging in a lot of instances. But the interesting thing is that, and again, this is something that a lot of people have figured out, is that entering a new market can be an incredible moat. The next step being, if you can turn that into a repeatable process, then really you're amongst a very few and quite an elite class of fintech startups that are able to expand into multiple markets. So what we thought we'd do today is chat about some of these challenges, some of the learnings over at Chippercash about expanding into multiple markets, and we'll talk a little bit about what we do in some of the markets we're in. But without further ado, I'm going to introduce you to Alicia, who's our COO at Chipper. has been really leading the charge around global expansion. Alicia, I'm going to hand over to you to intro yourself. Now, before I do, I warn you, when I do panels, when I used to do panels when Twitter was 140 characters, I used to say, keep it to like 140 characters, but they increased it to 280. So you've got a few more characters to tell us a little bit about yourself. But Alicia, please let everyone know what do you get up to at Chipper, and maybe a bit of our backgrounds as well.
Yeah, great. Thanks so much, Alan. Happy to be here and looking forward to having this chat today with you all. So thanks so much for joining. I'm actually based in London in the UK, so it's early morning here. I've had some coffee, but I'll do my best to actually be chipper this morning. So as Alan mentioned, I'm the COO of chippercash. My background, just really in brief, I've worked sort of internationally and in FinTech for the last, in FinTech for the last 3-4 years, internationally my whole career. Prior to chippercash, I helped launch a internet connectivity company in Kenya. And prior to that was working in tech in Silicon Valley. And I've been with chippercash for about 1.5 years. And as you can probably tell, I'm originally from the US, from California, but happy to be here in the UK and quite close to our African markets these days. Oh, you're on mute, Alan.
I feel like that's the catchphrase for yes. 2020, right? I was on mute. So before we jump in and start to talk about global expansion, Alicia, maybe it's worth talking a little bit about what we do at chippercash and just contextualizing for people who are watching what it is we do and maybe some of the markets we operate in.
Yeah, sure. So the first thing to know is that sending money across borders in Africa is one of the most expensive places to do so in the world. So sending money, for example, from Nigeria to Kenya might cost you upwards of 8 to 10% on top of the money that you actually want to send. So it's really, really, really expensive. And so the sort of basic problem that we at chippercash are trying to solve is reducing the cost of sending money across borders in Africa and also reducing the friction to do so. And so it's a really sort of very basic, straightforward value proposition, but that's the core problem that we're trying to solve. And the reason that we're trying to solve that problem is because, as we all know, access to financial services and the ability just to move money is critical to growing economies, creating opportunities for people, growing businesses, helping support families, et cetera. So it is a critical thing that I think we in the US and Europe and Australia take for granted every day. And so that is really the core of the problem that we're trying to solve. And I can go a bit into sort of the history of chippercash as well. So just kind of a quick note about how we started. So we started, the idea started being kicked around by our two co-founders kind of 2014, 2015. Actually, both of our co-founders are Africans. Ham Serengoji is from Uganda and Majid Majuled is from Ghana. They were born and raised in Africa, met when they moved to the US to go to university, and sort of really connected over the fact that they had grown up in Africa, but had the opportunity to move to the US and go to university and sort of build context and experience in both their home markets as well as in the US. And so after they graduated from university, they both kind of went off to do their own jobs in tech. But they stayed connected and kept sort of being compelled to come back to this idea of like, what can we do really to, again, take advantage of the fact that we know the African market and now we're very connected and plugged in and understand the US market. And they were both interested in finding a sort of a solution to this problem around sending money, well, to Africa from the US, but even more importantly, across Africa, because they both, as they grew up, had parents that worked in business. They saw that this was a challenge every day. And you have lots of companies that are doing remittances. So we all know Western Union and these companies that kind of are helping people send money from US or Europe or Australia back to Africa. But you actually don't have a lot of companies who are solving that problem of, you're Kenyan, you you move to Uganda for work, and then you want to send money back home to support your family, or you're Kenyan and you want to do cross-border business. You might be able to actually put your goods and services on a bus or on an airplane, but how do you actually send money across borders to support that business or facilitate that business? And so in, let's see, I think it was 2018, after Ham and Majid had both kind of had a few years in the real life world of working experience, they said, okay, we're really going to double down on trying to build this solution for cross-border payments in Africa. And they built a prototype for chippercash, got a few customers on board, and the rest is history.
Yeah, amazing. And from a customer perspective, I think we're sort of closing in on 4 million customers globally. 10,000 transactions a day, I think, is sort of what we've spoken about to market. And across how many markets now, Alicia? 8?
Yeah, 8 markets. And so our main markets are currently Kenya, Nigeria, Ghana, Uganda, Rwanda, South Africa, and we've recently launched in the UK. And we have a few other countries that are up and coming. I know we'll talk a bit more about why it's important for us to be expanding, but that's just a bit of a sneak peek.
Yeah. And I think, maybe we could hint at it later, but to say we've got a few markets is probably an understatement in terms of on the roadmap.
Exactly. Yes, exactly.
So I think maybe before we do jump into talking through nuts and bolts of global expansion, I think what might be interesting to hear is what makes it actually challenging to move money around on the continent. I think you're right. From an Aussie perspective, it feels like moving money is relatively easy anywhere in the world, right? I open up, FinTech product X, and I can just send money pretty instantaneously. But that's not the case on the continent, as I've found out. It's actually really challenging to send money from one border, across borders. So maybe just for some context, why is it so hard to send money on the continent?
Yeah. So I would say the first thing always in FinTech is regulation. So, but I'll kind of park that because I think that's a little bit of a given. A few other things. So one major challenge that we have faced and other FinTechs have faced, or companies that are trying to do payments in Africa, is just the ecosystem and the maturity of the ecosystem. And so basically, we've kind of actually, to be honest, needed to do 2 things at once in a sense, and that's build our product for our customers, but also actually help build the ecosystem and the infrastructure of payments cross-border in Africa. And so what you have is, as you can imagine, a very fragmented, decentralized set of infrastructure rails for payments across Africa. You have all these different currencies, you have all these different legacy banking systems. You have actually, in East Africa now, you have a very sort of mobile money-led market. And so for those of you who don't know mobile money and haven't heard of M-Pesa, essentially, 10 years ago now, one of the big telco providers actually decided to get at the challenge of access to financial services and the underbanked communities by enabling people to add money into a sort of mobile wallet on their cell phone, even if they didn't have a smartphone. But basically, they could go to a kiosk and give cash to an agent at a kiosk, and that would then load their money onto their phone, and then they could send money peer-to-peer domestically. And so you have sort of in East Africa, very mobile money-led market for a big, large swath of the population. Only a very small percentage is actually banked. And then in places like Nigeria, actually, you have a pretty bank-led market. And so the banks are actually the ones that are sort of leading the market there. And so even just having a bank-led market, talking to a mobile money-led market or a telco-led market is difficult. And so you have also all these like old legacy systems, again, in banking and telco, and those are just really, really hard to integrate with. And so every time we go into a new country, we're ideally looking for a partner that has potentially already done some of those primary connections and started to, with sort of the banks of the telcos, and started to kind of make that entry easier via sort of a partner that might have nice APIs for us to integrate with. But that doesn't always exist. And even in the last 1.5, 2 years that we've been in Africa, we see actually our need to both work with partners and actually scale their capacity, as well as scale our own in a certain sense. So that has also been a really big challenge. I mean, just to give also, to make it kind of really concrete, just think about the fact that, like, I actually was talking to a friend this weekend who was saying that in the early 2000s, he was trying to launch a video conference and communication tool. And the infrastructure just wasn't there for it. The internet wasn't great. People didn't have smartphones. And so essentially they were ahead of their time. And I think that we are right at the beginning. Timing is also everything. And we're right at the beginning of this ability to kind of have enough partners and infrastructure to plug into, but we're still needing to scale it alongside our partners. So I'd say that, after regulatory, that's the biggest challenge. Go ahead.
Yeah, and I was going to say, it's quite acute, right? Like, even if we think about some of the mobile money providers like an MTN Ghana doesn't necessarily speak to MTN Nigeria all that well, right? And
Yes.
so you end up with this really interesting scenario where you might have an entity, so MTN, for example, or Airtel or whoever it might be, who operates across markets. So prima facie, when I looked at it, I'm like, well, that's great. But the reality is that even the same operator, it's hard to get that connection across multiple markets. So it's quite an interesting case study on the continent around how dispersed and how hard it is to actually tap infrastructure. So I know, there's a few people here that are running Aussie fintechs, and it's challenging to hit up the Aussie payment rails, but it's just a different level on the continent. So that to me was really interesting when I sort of dug in and started looking at some of our partnership providers on the continent. Okay, let's get into the good stuff. Let's talk about expansion. Yeah, go on. Sorry, Alicia.
No, I was going to say, maybe this is a good transition, but even you've seen at Chipper, basically when we talk expansion, we talk partners, we talk partnerships, and they're so intrinsically tied that, like you said, I mean, I think it's also, we're constantly pushing our partners. And when I say our partners, those could be sort of aggregators who have done the primary connections or who have already sorted out regulation, licensing, et cetera. And we've seen that in every place when we go to a new market, it's not a given that our partners actually have the capacity to support the whole scope of what we want them to support. And so it's also us working with them at the same time to, get them to the level where we need them to be in order for us to launch. But I'm sure we'll get there.
Yeah, we're definitely going to get there. Partnerships is a classic one that we've been working through actually recently. So so let's start from the absolute beginning and talk about thinking through an expansion into a new market. So I mean, we've now done 8 markets. We've got quite a few on the roadmap, and we're sort of thinking through how we do this ourselves even better. So from a Chipper perspective, like, what are some of the things that, a company should think about in terms of looking at other markets? What's sort of the starting point around this, Alicia? What do you think that might be?
Yeah, I mean, I think the starting point, of course, needs to be, why do you want to expand to a new market? It's not just because, it seems sexy to be like, oh yeah, we're in 2 or 3 markets, I think there needs to be a real reason. And for us as chippercash, obviously it's sort of baked into the DNA of our product because we're cross-border. And so in order for our product to actually have the value proposition that we're promising to our customers, we have to be operational in 2+ countries, or else you're not really doing cross-border payments. But I think for any company, really understanding what's the motivation. Is it, customer acquisition? Is it, getting into a new market because you want to be ahead of the curve of, other potential competitors? Like, what is really the reason why you want to expand? And once you've kind of figured that out, then I think the sort of analysis might be a bit easier in a sense, or at least sort of how you weight various criteria or various factors might be more important. And so for us, I mean, I don't think it's rocket science in any sense of what are actually the, the factors that you're going to evaluate. Of course, you want to look at things like, what is market sizing and market opportunity, and what does the competitive landscape look like, and how easy is it to enter? Although that could mean a lot of different things. And for us, like we mentioned quite often, at least for entry point, are there partners that we can work with and can support our product. For us, of course, the regulatory side of things is really important to understand. And then, as we talk about this sort of X factor of like, is there kind of just anything else? And the anything else might be, is there a regulatory sandbox that we can work in? Do we have a team member who's from that country and has really good connections there, either with government or other people that are in the market, et cetera? Or do we just is it, I guess this kind of goes into market, but is it sort of already a known remittance corridor with another country where we're already operational? So for us also, Chipper is very much about the network effect. And so we're constantly trying to open markets where we know that people need to send money cross-border, and there's sort of already a pathway there. So basically, as you know, we kind of take all of these, what we know and all the information that we have about these different sort of key factors, and then we actually go and we weight them. But I would say the caveat is that there's obviously no perfect information, and I think in any market there's never going to be perfect information. And I think for many companies, when they're expanding to a new market, there's also, there's an unknown, because you're probably creating a product. You're actually kind of creating a market in a sense. And so that's unknown. You don't actually know what the opportunity is. And so sometimes I can, honestly say we've launched in markets where it might not be that the numbers looked that great, but we also just, in Africa, because there aren't these formalized cross-border payment corridors already, a lot of it's informal, that data just isn't there. And it's just anecdotal from the team, or it's anecdotal from people that we know in the market that say, hey, there's a ton of South Africans that send money to Zambia. And that's just money just flows. And a lot of it is informal. Literally, people still put money on buses, or, send money with relatives to, between, a main city and a rural town or something like that. And that's not tracked anywhere, but we know anecdotally that it exists. And so sometimes we'll launch just based on some of that more informal information or imperfect information that we have.
Yeah, I mean, it's really interesting, because I think there's another cut on sort of the way we could think about it, right? Which is, well, we don't need every market, right? Which is, we could be in 5 markets, 6 markets, 8 markets, 12 markets, and maybe that's sufficient for coverage. But I think one of the things we've talked about is this idea that expansion is nonlinear, and the value it provides to a company is nonlinear. It's actually some quadratic function, because as you sort of expand out into markets, not only do you, obviously, in terms of our business, it's really around remittance and moving money freely globally. But even as a fintech startup that's doing, what seemingly might not inherently be a cross-border, cross-market play, it's the value of the network that you start to build across different markets that's really valuable. And some of the intangibles, right? Which is, maybe you can start to hire in different markets because now you have access to a different time zone. Or, you can start to think through, and this is sort of our X factor bucket that sometimes, goes into it, which is, now all of a sudden we can unlock new kinds of demand. And, as Alicia said, that, there's some of it is informal discussion, but also just, on the continent, a product like ours just doesn't exist. So it's hard to measure. So there's a whole bunch of other factors that I think, founders can think through when they're looking at expanding into different markets that aren't just driven by the, how many consumers, like what's the likely TPV? Like, there are factors that can actually drive some interesting outcomes for a business. And again, I like the analogy of just this, non-linearity that you can gain from being in multiple markets.
Or it might be testing a new product or a new feature.
Yeah.
So, I mean, we haven't talked about crypto yet, but but we have obviously in Africa and globally some governments that are more friendly to crypto. And it might be that we want to launch in a country simply because we know that it's friendly to crypto and we want to test that product in that market. Yeah. Or with a subsector of customers. So again, it's very different rationale, very different objectives behind expansion, and all of those could be valid for your business model.
Yeah, 100%. And again, I sort of, want to point out to founders, it's, don't think about it too linearly. I think sort of having a few group thoughts around it is important, but also sort of thinking a bit broader than just, okay, market size, customer set, all important, but think broader. We have a matrix that we've sort of been developing around it, but also, I think the X factor is really important. Okay, cool. So let's take the next step. Let's say we've decided, we've gone through the process, we've started to build a foundation for why we want to expand out into a new market. Alicia, what do you reckon the next step is? Like, what's the actual now, hitting the ground? What do you think companies should be thinking about?
Yeah, so I mean, again, for us, it's really about what is the go-to-market strategy. And for us, again, it's very much based many times on partnerships, many times on, so basically making sure that if you need to go out and find the right partners, making sure that you're beginning to talk to partners and ensuring that if either they can today meet the needs that you need, that you have, or they're willing to grow together with you. And B, I think for us also a big element of it is very early bringing in other cross-functional teams. And so at Chipper, we say that expansion is a team sport. And so making sure that as early on as possible, we are getting in front of our compliance team, or getting in front of our product team, who then talks to our engineering team, our operations team, et cetera. So it's making sure that from the get-go, everyone is kind of moving in lockstep, or at least has visibility into what your plans are. And so I think, we are, to be honest, still getting better at this. I think, when you scale in a team size, like we have at the beginning, as I'm sure many of you have experienced, you're 5 people, you're 10 people, you're 20 people, everybody just knows what's going on because everybody talks to everyone all the time. We're now 125 people. And so everybody doesn't talk to everybody at the same time. And so we have to make really concerted efforts to make sure that there's visibility across different teams of what we're planning on doing, what we are doing, what we have done, et cetera. And so, we're spending more and more time and focus on just communication, because I think that, sometimes, I don't want to say slowing down, but making sure that you're kind of really focusing on communication will help you move a lot more quickly later on. And we've just had an instance of this where compliance felt like they weren't fully informed. And so we had to slow down a bit to kind of bring them up to speed. So again, we were all in lockstep before we kept moving forward. But I think we'll continue to learn and really, yeah, just making sure that everybody is at least informed. And again, like we said, you're never going to have perfect information, and you may also not know where information is going to come from in your organization. So as we sort of like expose others to, this is our roadmap for expansion, these are the partners we're thinking about working with, etc. All of a sudden we find out that we have a team member who, hey, yeah, I worked in Namibia before. It's like, oh, great. Okay. So now we have, so I'm just kind of making an example, but really I think that just making sure that you're lockstep with your team cross-functionally just is something that, can't overemphasize.
100%. Just on that last point, and I want to double click on a few things actually you said there, Alicia. Yeah. Incredibly insightful, like points around expansion, but just to that last point, in our Slack, one of the team sort of put through looking for someone over at a particular company, and it so happened that I knew that person, right? And so
Yeah.
it's just
Yeah,
the
good
guy
example.
all the way down in Australia, right? So it definitely
Right, exactly.
right. And so yeah, it's sort of that serendipitous slash, the more APIs you expose, the more sort of access you're sort of getting to knowledge inside the company, which I think is a really interesting point. Let's have a click on partnerships, right? Because I think it's sort of under discussed. When I speak to founders who are thinking about going global, the first thing that pops to mind is, the regulatory hurdles that they're going to have to jump over, which is, incredibly valid, top of mind, all makes sense, right? Because you're not starting from, when you're a fintech, when you go global, you're not starting from zero, you're actually starting from -10, because there's just so much heavy lifting you need to do before you can actually send the product out to market. So, partnerships is one that I think it's under discussed, actually, to be really frank. When I speak to founders, they just assume they land, they figure out the law and everything else works. The reality is it's far from the truth. So like even, just thinking about Australia, it's not incredibly easy to connect into Australia's, financial piping. It's better than in other markets, but there's still quite a few hurdles you need to jump over to sort of get access. For example, if you want access to NPP in Australia, you need to work with a third-party partner. There's no way to tap that yourself, right? Which makes sense. You don't really want that heavy lifting, but you can't. There's just no way to do it really as a fintech startup, and that's something you need to work through, right? So thus the partners are really valuable in a market, and whether they're a BaaS provider or an aggregator in some markets, those relationships are really important. What are some of the things you could sort of maybe share with people around how to think about partners, how to sort of, map that out, mentally, or maybe in a matrix, how to think about that? Because I think it's actually challenging and well under discussed, because people just think, okay, it's easy. I'm just going to pull an API, bang, done, right? Which definitely I can tell you is not the case.
Yeah. Well, it's interesting that you say that, because I think that one of the main things that we have really been working on in the last few quarters is there's the step one of sort of identifying the partners. And we've definitely made these mistakes. So you identify the partners, you start to build a relationship with them, you see maybe on their website or whatever they tell you about, yeah, I can do X, Y, Z. And then you sign the commercials, you start the integration, and then your tech team says, no, actually their APIs don't do half of what they say they do. And so I think we definitely made that mistake more times than we should have. And so one of the main things we've started to really front load is partner evaluation. And so how do you really get to know your partner? And again, sometimes maybe it isn't that they've done exactly what you wanted them to do before, but you can really also try to get a sense of like what that relationship is like, and how if they're open to and capable of building together. And so again, like you mentioned, we now have this nice partnership matrix, which talks about, various things like how many markets is this partner in, and, can they fulfill the needs of all the different products and features we want to launch? Do they have regulatory cover if maybe we need that? Do they have nice APIs? Are they one thing that we've also been looking at quite a lot, as you know, is for us, particularly around expansion, if we plug into their API, do we get multiple markets, not just one? So there's sort of like that front loading of, okay, getting those inputs, and how do we start to kind of like put that partner or sort of score that partner within our matrix. But then there's the second step of like, okay, we've kind of done this initial rating. Now let's, like you said, double click into the evaluation of like, does what they say, really mean what we think it means? And so I think that we're trying to dig a lot more deeply and sort of just validate some of those initial points. Because we also, very recently had a partner who said that they could do everything we wanted to do. And so we kind of spent time building relationships with them. And then once, for example, we started going through due diligence with them on the compliance side, we were asking them some questions around how their company was structured, and they just couldn't answer them. And I would say in the past, we've honestly made the mistake of like actually starting to do the integration before because we were just in such a big hurry, because we were trying to solve a problem that we had, like we had gone down in one of our corridors. And so we're like, okay, any partner, just find a partner who says that they can do this. And from a technical perspective, they could. But we actually started, pressure testing a bit their compliance side of the house, and they just couldn't answer some of the questions that we had. And so we ultimately had to, basically pull the plug on that before we, for that one, we hadn't started the integration yet, because I think we'd gotten smarter. We're like, okay, we need to make sure that they kind of cross all the T's and dot all I's first. And so really, really kind of, you have the initial evaluation. Yeah, the partner looks really good. And then, start to get a bit more in depth around some of these other points. And then also you can decide, no partner is going to be perfect, or at least in Africa, no partner is perfect. And so there's different sort of risks, or, different sort of leaps of faith that we can take with partners, depending on the relationship that we have. But for others, no. So that's also sort of an evaluation that you have to make at some point, or a decision you have to make at some point.
Yeah, 100%. And I think, part of working with partners is realizing that the partners are relying on other partners, right?
Yes.
It's sort of, maybe
I thought you were going to say partners are people too, but
they are people, lovely people. But to use a slightly, I don't know if this is going to be the best analogy, but it sort of turtles all the way down, right? Like you are really, unless you are directly plumbed into the payment network or a mobile money provider directly, you're relying on other people. And so, early on, example I'm sure most people know about is early on in Challenger Bank days in the UK Challenger banks would fall down all the time because they were relying on GPS or, another payment processor. Payment processor goes down, all of a sudden, Monzo, Revolut, Starling are all down, right? And that's reliance, right? And so when you enter a market, you're relying on others to provide that essential plumbing that is essential to a consumer fintech business. And so part of the due diligence is really important, and sort of understanding what it is that they're providing, who their partners are, how their compliance program works, because at the end of the day, people, both parties are going to have to likely report to, your local FinCrime authority or, your local financial services regulator. And so it's complex, right? Part of that process up front is really trying to understand, gauge, and at least know what you're in for when you're working with a partner. And when a partner can't sort of work through how their money movement works, it's probably problematic, right? And so it's a challenge.
Yeah, and that's a good point as well. I mean, I've been talking a lot about, okay, how do you initially select and onboard a partner? But then there's actually the partnership and what happens after, you go live for your customers. And so a partner's ability to actually work with your team from, operational perspective day to day. Do they have the support system in place to actually, resolve issues, or again, around communication? So when things happen, what are the mechanisms for communicating? I mean, we've dealt with partners in the past where there would be, for example, maybe potentially a suspicious transaction, and our partner would literally just block the transaction and not say anything to us. And of course, we have the relationship with the end user. And so the end user comes to us and says, why, where's my money? Why was my transaction blocked? And we have no visibility at all whatsoever into what's going on. And so, it's also the support system that the partner has in order to actually facilitate positive, good communication, and actually to keep you informed so that you can keep your customers happy is another big piece. So like you said, it's complete reliance on the partner.
Yeah, 100%. And I think most founders realize or understand that when they're building a product, especially consumer facing product. And I mean, even a B2B product, there are rarely instances where, even a BAS provider has primary access to payment rails in a country, or, has a exchange settlement account, etc. Like it's actually really rare. So, you are reliant, and they're reliant on someone else. In some instances, they're reliant on someone else, right? So it's sort of a challenge. One thing we haven't talked about, we sort of, talked a little bit about it, we sort of jumped over it a little, are regulations, right? Like obviously when we enter a market, there is the initial sort of understanding of what a market looks like from a regulatory perspective. Doing this with a market actually currently that I've never been to, have a vague understanding of how the law there works, but it's actually really, it's crucial. So maybe, Alicia, do you want to choose maybe a market, or maybe just generally you can speak about some of the regulatory hurdles, some of the thinking we've had to do in markets, and maybe some of the unexpected twists and turns we've seen in some markets.
Yeah, I can start with the unexpected twists and turns we've seen in markets, which makes every day interesting. So as you know, we launched in the UK end of last year, and one of the main reasons that we were launching in the UK, or one of the initial corridors that we were looking at, was the UK to Nigeria corridor, because it's one of the biggest corridors coming out of the UK into Africa. And we had been working on the integration and the licensing and the partnerships in the UK for months. And we were getting ready to launch December last year. And literally overnight, I think we may have found out about it via Twitter, to be honest. The Central Bank of Nigeria, the CBN, completely changed its regulations on how inbound remittances were to happen. And so, of course, we were planning, we had built our whole integration around somebody in the UK being able to send pounds to Nigerian naira. And of course, in Nigeria, currency is naira. So you would expect that, if somebody sends from the UK, the recipient's going to get money in naira. But the CBN decided, actually, because of some sort of macroeconomic reasons, and it's a whole other thing to go into, that they wanted all remittances actually to be in USD, in US dollars, which was not how our integration was built. And it was not an overnight quick fix. And so very quickly, actually, we had to kind of shift and decide, okay, we actually have to put the UK to Nigeria corridor on pause, and we needed to launch our primary corridor, UK to Kenya, instead. And so that was, a whole sort of team effort of everything from our marketing launch, etc., was all based on launching UK to Nigeria, not UK to Kenya. And so we had sort of a big team effort overnight to find some influencers in Kenya and do some marketing and customer activation, et cetera, in Kenya versus Nigeria. But basically, the Central Bank of Nigeria just can make decisions overnight that really change the way that your product needs to function. So that was definitely an interesting experience, but I guess it kind of teaches you that regulation, it can change, and that you essentially have to be ready for and have a backup plan and a backup plan for the backup plan, I guess. But just more broadly, I mean, hopefully that's also an isolated incident that, unless you're planning on launching in Nigeria, you won't ever face. Although Southeast Asia, I don't know. I mean, I think there might be some analogies there with markets that some folks on this call might be working in. So you might actually want to remember that one. But generally, regulation, I mean, we definitely, market entry, we look to see, okay, does it make sense for us to enter via partner for potential licensing cover, or do we want to go after our own licensing? What are the trade-offs? How well do we understand the regulation? How long do we think, and what's the level of effort to actually get an independent license? And so, in some markets now, we are at the very same time sort of launching with the partner, but in concert, basically right away trying to apply for independent licensing. And so it's kind of going down both paths. Although in some markets like, Australia, UK, or whoever it is, it might be that we go directly for a sort of equivalent of an agent license, or something like that. But again, it's through partners, but we still independently essentially hold a license. But I think it's country dependent. I think depends also on how easy to understand the regulation is. Nigeria is particularly fickle, I would say, but some of the other markets, not all the markets that we work in are that fickle. And it also depends on, I think, if you have teams on the ground or you have sort of somebody that you can work with who you feel has a close relationship with the central bank or the regulator to kind of understand, what the regulation is today and what it might look like tomorrow, your approach. So I don't know if that's a straightforward answer, but I don't think there's any straightforward answer for regulation. So.
Yeah, I mean, the regulatory hurdles are challenging, right? And prima facie, every founder sort of sees that and understands that. I think one of the interesting things, when you then break that down from strategy to tactics, is really thinking through, as you said, Alicia, who's the partner that we can work with to get us to market? Because speed is everything, right? So getting to market, actually, battle testing the product, getting punched in the face. That's sort of the Mike Tyson analogy. You have a plan until you get punched in the face. You need to do that and figure out who your customers are, who's going to love the product, who wants to use it. And that's, fantastic to be facilitated by a partner who's going to give you regulatory coverage under their license. But at the same time, I think then what goes under discussed, even in a local market, if you're launching, is thinking through, okay, the long-term play here is that to the extent that we succeed, which is the use case, is the outcome you want, you need to be independently licensed. I joke in Australia, for example, all roads, if you're a challenger bank, lead to being an ADI, which is being a bank here. That all roads lead there to the extent you're successful. The harder question is, when do you do that? But you always have to run that substrate, which is, how do we become independently licensed so that we control our own fate and destiny around this kind of stuff, versus having that in the hands of a partner, right? Because I think, again, sort of nuts and bolts stuff, if you're running on someone else's license and they also are your vendor, you're in a very precarious position if something goes wrong. So to the extent, let's say the product isn't exactly what you anticipated, well, it's sort of maybe challenging to decouple that license from the product. So there's like that tactical stuff you sort of have to navigate, how you do it, and maybe it is that you rely on a partner for access to, financial plumbing, but then you, get a license from someone else to decouple that relationship and ensure that you're able to operate if something goes wrong with them, or, the commercial relationship sours or whatever it might be. So it's, there's a bit of like the nuts and bolts tactics above the just figuring out what the regulatory regime, which, when I speak to founders, it's sort of like, oh, it's easy to enter, from Australia perspective, it's easy to enter New Zealand, right? Great, but who's going to give you access to piping over there, and how are you going to connect with infrastructure? Are you going to want to be licensed there in the long run? How do you work that through? So, there's that very tactical stuff you have to sort of work through, I think, as well.
And I think that you can, a lot of times you can enter via partner. And then it's like you said, the best case scenario is being successful and scaling and getting really big. And at some point, you're going to, the regulator is going to come to you and say, so where's your license?
Yeah.
And that's on one hand, a really amazing moment because it means you made it. On the other hand, if you have not already started to have a direct relationship with the regulator and the regulator has to come looking for you, that's never a good place to be in. So I think having sort of, like you said, you don't have a plan, or you think you have a plan to get punched in the face. You could be cruising along with the partner and everybody's happy and okay. And then, regulator all of a sudden decides, actually, you're too big to be riding on somebody else's license. Where's yours?
Yeah, and it's sort of stifling, right? Like, let's flip it and think about the US, right? So broadly speaking, if you're going to engage in financial, offering a financial service product, it's likely you might need a license in that particular state. So it's actually quite stifling to your growth if you haven't got that, thought process bubbling away. Okay, how do we get these licenses? How much capital do we actually need? Which state should we offer our product in? And so, it happens pretty quickly. But all of a sudden you're like, you're a successful fintech. You open up and want to do, for example, let's say buy now, pay later in the US, and then you could only offer it in a few states, right? So it can be challenging. And And so, you know, sort of running that substrate on the regulatory stuff is really, I personally think is really important. Understanding, okay, what's our little, you know, Bobby Fischer 5 moves ahead play here, right? Like, how do we actually play this? So on the nuts and bolts, I think is sort of really interesting. Let's flip it for a second, Alicia. What are the things that you think are red herrings? Like, what do you think when you're entering a market are some of the things that people, you know, maybe really obsess about, but in the end, when you enter the market, it's not probably as relevant or important as what people make out?
Competition. I think, and I say that when I say that, I mean, I think that you can obsess over what your competitors are doing or how successful or not successful they are. But the reality is that, or at least in our experience, the reality has been that if you have a good product, then customers will find you. And that what the competition is doing is, you should know about it, but I think spend way less time than you might think that you should on figuring out what competitors are doing, and if they're launching a new product, and if they're, you know, just all of these things about, you know, you can kind of just go into a spiral of like figuring everything else, you know, figuring everything out about your competitors. So I think it's competitors and maybe something around who has failed in the past there, or being dissuaded, unless, I mean, it depends on why somebody has maybe failed there before, but I'll just again give the example of kind of connecting back to what we talked about at the beginning of the session of like, we are at once, you know, building product, but we're also building sort of ecosystem / infrastructure. And if we focus on why somebody who was maybe trying to do something similar failed 3 or 5 years ago, we would never be trying to do what we're doing. But the ecosystem is different, the infrastructure is different, and our existence of helping build and fortify and improve that ecosystem and infrastructure actually sets us up for better success than maybe somebody who tried something similar 3 or 5 years ago.
Yeah, 100%. You know, competition is overthought about, and sort of tactics and actually doing the work is under discussed, right? Like, yeah. I think, you know, in many markets, I think it's easy to say, oh, World Remits here, or, you know, MoneyGram, like, but Wise did it, right? And so there are many ways to sort of carve it and figure out how you can sort of enter the market. And I agree with you. I think understanding why the failures were there, but not over indexing on it is really important. And you said, I mean, to be honest, I sort of, I'm going to go on a tangent, but I sort of blame investors sometimes for this one, where, you know, they'll look at a deck and be like, but how are you different to company X? And it's like, well, you know, let me tell you about how partnerships work. And let me tell you how hard it is to get licenses. If we could just do that, then we're already a few moves ahead.
Yeah, exactly.
Because it's not strategy. It's really, when it comes to global expansion, it's tactics. Like, you need to be on the ground and figuring out how to do this stuff. It's actually really been incredibly interesting to see how we do it on the continent. Because, you know, I have a good sense of how we do it in Australia, how we want to do it in Australia, but looking at the continent and sort of the maneuvering and the on the ground tactics is really fascinating to see. And again, I just think founders over-indexed by magnitudes of order around their competition and trying to differentiate versus just saying, actually, if we can just execute 3 times faster, 3 times better, then you know what, we're actually going to be ahead on this one. Contrarian view potentially. So speaking of contrarian views, we've got a few minutes left, and you know, happy to take, I should have said from the start, always happy to take questions, happy to you know, get perspectives, you know, happy to even debate some of the points, but feel free to drop anything into the chat. I'll pick it up, and you know, we can sort of bat it around and talk a little bit about it. But again, coming back to contrarian views, Alicia, what do you believe a few others agree with you on, or what's your contrarian view in this space?
I mean, hopefully I'm not too contrarian at Chipper with this, and we talked about it a bit before, but just that, like, sometimes decisions about expansion aren't rational. Like, you can try to say that you have this, you know, this business case, or, you know, the numbers are showing that you should do this or shouldn't do that. I think sometimes if you know your market or you have people on your team who know your market, your gut can be right, even if there isn't data to support it. And I guess I will caveat that with the fact that you also have to have the resources in order to launch in a new country. And if you can do that sort of in a, a small fashion, potentially just offer one part of your product, so you don't have to build the entire thing, and see if you get traction in the market, and see if you have a value proposition that customers actually like, before you go gangbusters. That might be the way to go. But yeah, I just think that sometimes it's overrated, again, like, having this big business case. So you have to understand what you're doing and have a rationale why, but it doesn't always mean that like the numbers are going to show it, or something like that, cut and dry.
Yeah. Data is overrated. But I think that should be the sort of
even everybody wants to say we're a data-driven company. we're a data-driven company in some ways, but in other ways we're a gut-driven company.
But I mean, we are sort of a little further down the line, but we're still an early stage company, right? We've got, there's 125 people raising capital, but we're still an early stage company. And you're right. Like, I mean, it's easy to over-index on data and sort of say, okay, here's what Pew Research says about the corridors across, market X and market Y. But then you sort of dig in, as you mentioned before, there's informal markets that are happening, and it happens across every single, as I've found out, every single community, right? The uncle that sort of takes the money, puts it in a bank account, sends it back across, someone picks it up. There's that kind of informal stuff that's hard to gauge. And inherently in cross-border data, in terms of remittance, it's actually, I mean, the data's pretty poor. Having spoken to a few other companies that do remittance, it's sort of like, their view as well is, I could tell you the data is wrong because we have a corridor that is, magnitudes bigger than what it should be. So I agree. Like, I think early stage, especially in early stage companies, it's easy to over-index for data because that's something you can rely on and put in a deck. But that intuition, that feel is sort of harder to sort of explain to, a leadership team, for example, how you might think about that. Okay, so question. Maybe I don't know. We could tag team on this one, Alicia. But
I think you should take this one, actually.
Yeah, I'll take it. Yeah. So thanks for the question, Toby. So I think one of the hardest things when launching a fintech anywhere in the world is finding a wedge. And so if you think about Australia, what a lot of companies have really struggled with as a fintech, I'm just going to talk general and then I'll get to the very specific around why Chipper in Australia. Finding a wedge in Australia as a consumer fintech is really hard. Being a millennial bank has proven to be quite challenging. Being a remitter for everyone is quite challenging. And so I think part of the reason Australia is really attractive for Chipper, and actually I think in many markets Chipper, can be an interesting product, is because we serve a very specific type of customer. So what that means then is we can really be focused on the go-to-market strategy, where we spend money around our customer acquisition. We can be really focused about our message. We're not trying to speak to 50 different consumer segments. We're speaking to one. We want to make it the best way to move money from Australia or any other market for that matter back to the continent. And as we open up corridors, we can start to speak to very specific consumers. And then I think, again, I like to be really tactical about thinking in terms of markets. What that then means is we can really be laser sharp about how we get into the right messaging channels for our customer. So, we can speak to very specific community groups. We can be very targeted about the types of people we partner with, even on the influencer side, or be very focused about which suburbs we advertise in. So just from that perspective, I think it's an incredibly big opportunity. And, you combine that, obviously, now it would have flipped to data, when you combine that with the interesting data around Australia's demographics shifting, and the large increase in the African community across Australia, and the diaspora growing, and that really being quite a big growth area. In many ways, I think, it's easy to compare it to what we saw in Australia around Southeast Asian immigration. We're sort of seeing that from African communities. It's steadily rising, and there are just big corridors. Australia, South Africa is a big-ish corridor. It's not as big as other markets. I'm not going to pretend it's like one of the biggest corridors in the world, but it's a big market. And again, it's very easy for us to speak to South African whether it's expats or diaspora, and really get our message there. And so, I like to play a wedge strategy. I like to tell founders to play a wedge strategy to begin with. And I think that's what we have, for example, in Australia. I know, was there anything else you wanted to add to that, Alicia?
The only other thing I would add is I think Australia also gives us an opportunity to look at what is our business model for what we at Chipper call rest of the world. And so I like to say, we say rest of the world when it's not Africa, which is kind of the inverse of what most people say. But, we've launched in the UK, we'll be launching in the rest of Europe at some point. We're launching in the US and Canada. But I think that, especially since we have you, Alan, we can also play around with the business model. Once we launch in Australia, we can use it as a test case for what is our, off the African continent business model and strategy and playbook look like. So it's quite interesting from that, from that perspective as well.
Yeah, definitely. People talk about Australia being a test market. This is a great example. We're actually doing this as a test market, right, in part. But cool. If there's no other questions, happy to take one last question if we have time. But if not, I'll give it sort of 2 or 3 seconds. I'll say a few parting words and we'll call it a night and let people, I suppose, get to their dinner or whatever else they've got planned for tonight. Okay, going once, going twice. Oh, here we go. Oh, there we go. A nice comment. What a fantastic
That's an easy one.
session.
Thank you.
Thank you, Jane. So on that note, I'm going to close proceedings today. Thank you, everyone, for coming along. I really enjoyed this chat. I love talking about sort of, one, what we're doing at Chipper, but two, I love that tactical, on the ground, nuts and bolts thinking that I think, is useful to anyone that's looking at the fintech space, actually generally anywhere in tech. But thank you, Alicia, so much for your time this morning. I was going to say tonight, but this morning. I know it's early in the UK. And yeah, I will be seeing some people at Intersect. But thank you again, Alicia. And thanks, everyone, for coming along.
Thanks, everyone.